BDRX is trending up 18.68%. This is Thursday, the 9th of October 2025, pre-market session. Intraday high in this pre-market session, $16.91. It has obviously it didn't hold there. There was a huge spike to that level and got rejected there. The stock has a really tiny float, around 6.1, 0.61 million shares. And even though its short interest is not significant relative to this 0.69 million shares, it's also observed that the insiders hold a significant chunk of of the of this 606 0.69 0.61 million shares. So if you do the sum, if you do the whole sum, you can even see that what is actually available for trading is actually very tiny. But we're going to hear more about that. So we'll hear more about that. Let's see now what we have. The stock has been, on a bullish trend since the 9th of September. It went into high gear from Tuesday, the 7th of October. Yeah, so the 10 period moving average has been serving or once served as a primary demand line. This was as of Wednesday, I think yesterday. Yeah, as of yesterday. So the extrapolation is currently saying that by midday today, it may contract this expansion we're looking at right now, and that may remain in place up till Friday, the 17th of October. Okay, let's see what we have in terms of projection. We already have 16.91 there. Price pressure momentums on this 4-hour chart. Yeah, everything's robustly trending. Nothing here is negative at all. Let's see what we have on the daily chart. The daily chart is not active at the moment. Projections here are saying, let's see what we have. They are not in play, even though they have been tested in this session, but they haven't been met as things. The stock is now has pulled below them. So we have 10.1, 12.05, 13.25. The underlying trend is a bearish one, strongly bearish. So there's ample room to the upside. Even we have projections higher than $16 that printed today. We have, for instance, as of the 7th of July, there was, beginning from the downward projections, 1.45, and indeed severely negative prices. Obviously, that tells you that we are these negative values are referring to some really fractional prices. At the same time, to the upside, we have 16.05, 19.18, 21.11. Okay. So here on the daily chart, everything is also, yeah, okay. Yep. They are both, the 10 and 21 day moving averages are trending robustly. However, they are derivatives. Three out of the four derivatives are trading are fractional. And one is also severely bearish. One is severely fractional and bearish as well. So in the midst of all of this, we shouldn't read a lot of meaning into this price pressure momentums on this daily chart because things have changed now. You can see the stock is up 18.55%. So if the market opens, they will change. So let's not read a lot of meaning into that. So we're just going to listen now and hear more about what's going on with the company, with the stock and the company.
What we know about BDRX stock: float, short interest, and fundamentals. Low float and micro cap structure. One of the recurring themes in the community is that Biodexa appears to have a very small float and low market capitalization, which makes the stock inherently more volatile and susceptible to outsized moves on relatively small news or flows. According to one source, float is approximately 619,523 shares. That is about zero point 0.6 million shares, with insiders and institutions owning meaningful shares. Because of that low float, even modest buying interest or short covering can exert disproportionate upward pressure on the share price. Short interest and borrow dynamics. The high short interest angle is more nuanced than it might first appear. Key observations. According to Benzinga's recent short interest table, 13,531 shares are short, which amounts to 2.18% of the float. Some sources report a previously much larger short interest. For example, Fintel shows short interest in the recent past around 0.19 million shares. Why the community is debating a short squeeze. The convergence of low float, tight borrowing conditions, and a potential biotech catalyst naturally leads some in the online investor or retail community to speculate about a short squeeze scenario. Here's how the thinking typically works: small float plus limited supply makes upward pressure easier. High borrow cost, or limited availability for shorts, shorting is more expensive or constrained, reducing downside bets. Catalyst, clinical news, enrollment, trial updates. Good news could spark a rapid move upward. Shorts get forced to cover as the price rises, accelerating the move. A squeeze. Because the borrow cost is reportedly very high, Ortex data approximately 333% cost, and utilization is non trivial, short positions may already be under stress.
Okay, we have not been able to validate that 333% short interest rate. That's, borrow costs. We have not been able to validate that figure. The figure we have been able to validate as things stand right now is around 17%. That is, maybe, I would say, as of yesterday, the 8th of October, what we're able to validate is 17%. In the course of today's trading session, it may go up or it may go down. Okay, so let's continue.
However, a few caveats are critical. Actual short interest as a percentage is disputed. Some sources say about 2.18%, which is not extraordinarily high in absolute terms. The days to cover metrics are extremely low in many reports, zero point 0.1 to zero point 0.5 days, suggesting that even if there's a short squeeze, the magnitude might be limited unless volume surges drastically. Microcap or low liquidity names are also more vulnerable to manipulation, exaggerated volatility, slippage, and bid ask spread issues, which means execution risk is high. The baseline valuation expectations in such names are speculative. Even in a successful scenario, the stock might already price in a lot of hype. Thus, while a short squeeze is not impossible, it's far from guaranteed, and markets often punish hype when expectations are not met. Ortix reports short interest as about 5.22% of the free float, with extremely high borrow cost, for example, about 333.67%, and utilization about 25.72%. Some public stats, like stock analysis, show short interest equals 366,900 shares, or 12.69% of shares outstanding, 14.77% of the float, and a short ratio, days to cover, extremely low, 0.11 days, though those figures seem possibly inflated or stale. There is inconsistency across sources, which is common in micro or low liquidity names. Public short data is lagged and can differ in methodology. What constitutes a float? Inclusion or exclusion of locked shares? What's clear is that the borrow cost, availability, and utilization rate appear to be high, meaning that shorting the stock may be expensive or difficult in practice. That raises the potential for forced short covering if the stock moves upward. The combination of tight borrow plus low float gives a structural setup that some see as conducive to a short squeeze. Financials, cash runway, and risk. From what is publicly known, Biodexa is a clinical stage biotech, so it likely has limited or no revenue or negligible from marketed products. They have reported negative income, i.e., net losses, consistent with early stage pharma development. In a press release, the company states that the phase 2A study in type 1 diabetes began in June 2025, aiming to define effective dosing. The company also appears to be engaged in other pipeline or regulatory work, for example, in FAP, familial adenomatous polyposis, and has recently filed a European clinical trial application for its FAP program. In a shareholder vote, the company reduced the nominal value of its ordinary shares from pounds 0.000050 to pounds 0.000001, a capital structure adjustment that may help with flexibility. Given these facts, the stock is inherently risky. Clinical risk, funding risk, and dilution risk. They may likely need more capital, they may issue new shares. Risks and pitfalls to watch out for. Because of its speculative nature, the downside is significant. Some major risks, trial failure or inconclusive results, especially in so small a cohort, would likely result in strong negative move. Dilution capital raise. To fund further trial stages, the company may need to raise capital, potentially issuing shares at unfavorable terms. Data slippage or delays. Biotech companies often face delays which erode hype and credibility. Regulatory clinical execution risk. Protocol changes, safety concerns, recruitment challenges, or regulatory pushback can derail progress. Liquidity risk. In a low float stock, getting in or out at desired prices can be difficult in volatile conditions. Hype over substance. Sometimes markets price in excessively optimistic scenarios. If reality falls short, the downside is harsh. How this might play out in practice. Scenarios. Here are a couple hypothetical scenarios, not predictions, just possibilities based on how things might evolve. Bull case. Let's say interim biomarker data, C peptide, HbA1c, show promising directional improvements, safety is acceptable, and the company signals intention to expand the trial or partner with a larger biotech. Given the tight float and expensive borrow, short covering plus retail momentum could push the stock sharply higher. News flow may compound this effect. Base or gradual case. Data show mixed or modest improvement, or perhaps the effect size is small and ambiguous. The stock may rise on positive tone but plateau or drift until more definitive data. Some profit taking or volatility is likely. Bear case. Results are negative or ambiguous, or safety concerns emerge. The company needs to raise money, diluting existing holders. The stock may collapse swiftly given limited fundamentals. Short sellers or skeptics may push momentum downward in a low liquidity environment.
Okay, so just see what's going on. Just see what's going on. The stock is currently trending, and this, given the tiny flow it has, on some days you can see it trades, 27,000 shares. Okay, this is as of yesterday. 8,000 was traded. Sorry, 51,000 was traded. 98,000. Look at that. This is where we're looking at 1,560, so 1.56 million shares so far. This is only the pre-market session. This is only the pre-market session. So see what you make of this stock. Be really careful. Be really careful. And thank you very much for watching this video.